I want to shift. I have another question about long stock that you buy. So we can talk about PTOS or we can talk about NVTS. Long stock that you buy and now you're holding it. We can also talk about SoFi too. Just the idea
Two different
of
charts. Yeah.
buying it
Definitely.
and then it just goes bearish all of a sudden. You're holding it. But we have talked about doing call credit spreads and just what's the best way, or how would you continue try to make money off of these shares with options while it's the safest? I guess my question is what's the safest way? Because I don't necessarily, if my cost basis is so if my cost basis on SoFi is if somebody bought at 30, that's not my cost basis. I'm just using this as an example. If somebody bought at 30 and we see it's down at 16, what's the best way for somebody in that type of position to continue to sell options and not just sit there waiting for the stock to rebound?
Oh, this is easy. Like if you you would have just sold it at 30, just sell all your shares at 30. Oh, maybe
I just
okay, maybe my joke didn't hit the way I thought it was. But yeah, like MVTS, like just sell it at 30, right? Or actually just sell it at I would have just sold this at 34.04. Like just sell it up here and then you can buy it back down here. Like that's the easiest, that is the most foolproof way to make money in the stock market holding shares. You buy at the top. I'm sorry, you buy at the bottom and you sell at the top. Like that's the easiest way to make money on holding shares.
Yeah, and my crystal ball's in the shop today. So
oh, I know, mine too. Like if you guys figure out where I can buy the crystal ball that actually works, let me know. I don't think there is one. Okay, so everyone, option sellers love to talk about just how bad shares are because they're inefficient. They don't, like brokerages. They're just like, don't even waste your time with this. We'd much rather you like sell options. And like you're missing out on the share appreciation. And what Melissa's saying makes such a good point of like, how do you manage your positions to where you don't get called away too soon or you don't give back all of your profits?
Yeah.
And there's not a great answer to that, because no one really knows where the market is going. If you were to have told me that, some of the stocks, I have a stocks under 100 watch list, and I was just looking the other day and like some of the stocks on my stocks under 100 watch list in the last 6 months have gone from 100 to 700. Okay. And it's like, I should have just bought those stocks and not done anything else. Like just bought shares of those stocks and gone away on vacation to Iceland, Hawaii, like all the places. And I would never have to worry about the stock market, but I don't think we don't know what's going to happen. So for me, I just make sure that I know how to hedge my positions the best that I can. And if you don't know what hedging a position is, that means that you're reducing your delta. Like if you have 100 shares of stock, your delta is 100. That means as a stock goes up or down $1 and you own 100 shares, if your delta is 100, goes up $1, you make $100. Goes down $1, you lose $100. If you go and learn to sell hedges, I love to sell hedges. Melissa knows this. We do it together. We love to sell hedges that reduce our delta. So if you can reduce your delta by just say 30 to 40. Okay. So you're moving your delta from 100 to 70 or 60. When SoFi goes up $1, you're going to make $60 instead of 100. You're slowing it down. When SoFi unfortunately goes to 15, which Melissa and I are both in the SoFi trade. So we kind of feel this one a little bit. We watched it go up and then we watched it go down. Like you can see my pyramid here. Like I'm actually kind of happy because I've been adding to my SoFi position. I just need it to go up now and not come back down to the red line, but sell options to hedge your account. That means collars. That means, look, let's just talk about it real quick on the chart. I'm just going to draw some lines. When SoFi came up, and I'm not even going to talk about this because we don't know. Let's kind of zoom out. When SoFi hit right here, okay, let's say this was our previous high. I'm pretty sure that was the previous. Oh, no, good. Hey, look, there's a purple line here. How'd that purple line get there, Melissa? Oh, wait, look. This is where SoFi was back in 2021. So this is a good example. Like, I didn't even know she's going to bring this up, but like When SoFi hit right here, I would have looked to sell some covered calls at 24, which is actually 25, probably would have been. So when it's at 18, I want to sell covered calls as close as I can to here. And if I can't, then I'm going to sell some spreads. A covered call would reduce my delta slightly by like 15 to 20 deltas. So that means like I'm going to make less money as SoFi goes up. But look, when it got here and it actually touched this line, when it touched the purple line and you had shares of the company, that's like, hello, it's time to hedge my position. And if you don't have 100 shares, fine, sell a third of it. You know, one of the best things that you can do is if you ever get a stock to double, just take out your original investment and you're running with the house's money, and don't give it all back. You can still hedge, you can still make changes, but you can sell some shares, you can sell covered calls. Like when this kind of thing happens and you sell a covered call, let's just say it hit 25, like sell covered calls at 30. If you get called away and you bought SoFi at 15 and you get called away at 30, that's a double. Like that's a nice win. And you're going to, like, some of you people are going to fuss at me because I have coaching students who do this all the time. And then I have to come back in a little while and go, told you so. When it goes to 32 and you're underwater and you're like, man, I'm selling my SoFi at 32. Okay. Are you selling it high or are you selling it low? You're selling it high. So hedge by selling covered calls when it hits weekly support or resistance. In this case, like SoFi is great. I think when we look at NVTS, we're not going to see that on that chart. We'll look at that in just a second, but start selling covered calls, or even better yet, sell callers where you sell the covered call. So you sell a covered call at 30 and you buy some long puts here. Hopefully you kind of get a credit, give yourself a credit to where, look, yes, I'm going to get called away here, but I'm also able to sell my shares with that long put at 24. You're locking in a guaranteed win. You're getting paid for it if you set it up correctly to where you actually get a credit. And that might mean that your covered call might actually have to come down to like 30. And that's fine. Like, did it bounce at 30 before? But if you did this and you set up either a caller or even a super caller, which we're not going to get at today, like you made some money on the downside. And you're just going to have to wait for the stock to recover. But it's important, like when you start getting extended off the moving averages, to think about that. Like look at NVTS. Like NVTS, it ran for way more weeks than I thought it should. Like the 10 moving average is at 17 and it's at 34. Like if you own shares of that, hello. I know I shouldn't even ask, but a lot of people probably thought that this was going to 60. Like if it hits 30, it's going to go to 60. There was this one coach I had. He's like, if it hits 1,000, it's going to hit 2,000. He was wrong about that, Melissa. It doesn't, if a stock hits 1,000, it doesn't have to hit 2,000. But I don't even have lines on NVTS, and that's fine. This is a newer stock, but like a good place to put a line would be right there. And just look for places on the chart that make sense of where you want the lines. And when you come here and start looking, like where could you have known to sell a covered call or start hedging or take off some of your position on NVTS? Well, probably where it opened when it IPO'd would be a good level. Looks like around 22. Now, did it go to 35 and did you feel really dumb for 1, 2, 3 weeks? Yes. But look where it's sitting right now. I didn't even try to do this, but look where it's sitting right now. It's sitting right where NVTS is closing, is right at the IPO price. So if you didn't get in on NVTS, maybe now is not a terrible time to start looking down here to get into it. Where do you want to get in? You want to get in where you can get as many lines in between. So like $9 from 22, is it going to hit there? Probably not. But you can be patient. If you want to know where to buy and sell, ask yourself, am I buying high? If I buy right now, am I buying high or am I buying low? You use moving averages, weekly support and resistance to figure that out. Don't try to make this too complicated. Like hold on to the stock. When you start getting wins, people get really greedy and they think that they're giving back. And if you sell a covered call and it starts going against you, that you're losing money. No, you're locking in a win when you get called away because you're selling high. What if it keeps going? I mean, good example of when it keeps going and you feel upset about it is like, let's just say that you owned NVIDIA back in 2018, which I did, right? So like I own NVIDIA. I guess it'd help if I go to NVIDIA. let's look at NVIDIA back in like 2018, right? So if you bought NVIDIA and you sold it at like, $10 and now it's 200, if you got called away at 20, then you sold it too soon. But the thing about the way we do it is just start selling, get called away, start selling puts. I know a lot of people don't like the wheel strategy. The wheel strategy is like sell covered calls, get called away, start selling puts to get right back in. Hardly any stock is going to go straight up and never pull back, right? So start thinking about the wheel strategy to get back in, and don't be afraid to get called away at previous support and resistance. And yeah, like you can sit here all day and say, I shouldn't have sold my NVIDIA that I bought back at $6 a share, but nobody knows. What if NVIDIA went out of business? I know one of the best wins I had, I guess the luckiest win I ever had was I heard about this little company called Moderna. They were working on this DNA stuff, and then COVID hit. So I had some shares of Moderna, and I got called away right here at 360. Why did I get called away at 360? You might be asking. It's the same. Well, first of all, there was a line at 320, but I got called away at 360 because I looked here on the chart. The stock pulled back here before. Like you can kind of see there's some weekly support. Like I felt pretty bad when I got called away at 360 and it went to 480. I left a lot of money on the table. But now when I look, and Moderna is trading at, I don't even know, $47, I can tell you I sold the stock at 360. I feel okay about that, right? I feel okay about that. Do I feel great about NVIDIA getting called away too soon? No, I don't feel great about that one, but you win some, you lose some. Like, how do you make money? You make money by buying the bottom and selling the top. Like that would be the best way to do it. I don't know how to do that. So I just look for the key indicators. I try to make it as simple as I can.
I like what you said.
Probably the longest answer ever. Sorry, Melissa.
You're good. I like what you said earlier too, that truly selling a covered call is locking in a win, because your strategy should be selling the call above your cost basis. So you are locking in a win, and nobody should truly be upset about that win.
The only time you should really kind of be upset about a covered call is if you sell that covered call at 30 and the stock drops to 15. That's when you should be upset. Like selling high is the greatest thing ever. I don't know why people get upset about selling high. I would be way more upset if I sold this 30 covered call here. I'd be like, oh man, I sold the 30 covered call, and then the stock drops all the way down to 16. I just lost half the value of my profits. Like that sucks way more than getting called away. I don't know why people get that confused.
The other thing I just wanted to clarify for everybody who's a new trader, when you say reducing your deltas, could you just go into that a little bit more on a detailed explanation?
Yeah, let's just look at NVIDIA. We've been talking about it. We've been talking about NVIDIA a lot. So let's just talk about we're going to look at July. This is the monthly July options expiration. So Tasty Trade and almost all brokers do a really good job of this, except for Fidelity. I didn't say that out loud, did I? Did I say that out loud? I like to look here. So if you go and you sell like the 20 Delta covered call, right? It shows you that you're reducing your delta. So if you had 100 shares, you're reducing your delta by 20. This does a great job. Now, if you wanted to sell a spread or something like that, like you can see like your delta's only reduced by 5 because you have the ability to buy it back. But your broker should tell you exactly how much delta each option that you sell or buy impacts your account. And just know, if you have 100 shares, first of all, to sell a covered call, you have to have 100 shares. I think everybody knows that, but you can see the delta here and you can kind of think to yourself. And if you wanted to do like the collar, like I was talking about before, where let's just say, you bought it, I don't know where you bought it, but you want to protect your win. Maybe you're going to buy right at the expected range. You just kind of buy this option here. You can go here and sell a covered call. You kind of want to, I like to get credits, but look, this one trade by giving myself the right to sell my shares of NVIDIA at 185 with the caveat of having to sell at 225, which when you look at the chart, right? When you look at the chart of NVIDIA, like you're agreeing to sell. I hate this. See why I like trading, but you're agreeing to sell up here, right? You can reduce your delta by half, almost half. So if NVIDIA goes higher, if it goes $1 higher, you make 50 cents. If it goes $1 lower, you lost 50 cents, whereas you would have lost $1 before. So look here at the broker And each broker tells you this, and you can see the data, you can see the delta for your entire position. You can see the theta for your entire position. So this trade is actually costing me $1 a day because the theta is 1. Now, if I only sell the covered call, look, my theta is $11. You're getting paid $11 for selling per day for selling this covered call. You're collecting what, $410 for the next 30 days, 38 days. You're reducing your delta, getting paid. Now, if you want to go in, kind of like we were talking about before with like super callers, where you go in and you buy a put spread. So let's just take this away real quick and then I'll stop talking. But this reduces your delta by 13, right? It costs you a debit of 332. Well, come in here and sell a covered call right at the expected range. You just collected a 78-cent credit. You reduce your delta by 40. So you'd have 60 delta if you owned 100 shares, and you're getting paid $10 a day. So think of it that way, right?
Yeah. Yeah, that was good. Thanks for that explanation.
Sure.
I don't think I have any other questions today.
Cool. This is great. If you guys have questions, feel free to drop them in the chat. I should have mentioned that a long time ago. We're going to do this probably every couple of weeks. We'll have a quick video of Ask Me Anything. We said it's going to be a quick video, and it turned out to be a really long video. We'll break it apart into smaller pieces. And like, if you have questions, throw them in the chat, and it'll be fun. I think it was a great session. So thanks, Melissa. Thanks for joining us today. And it's good to hear from someone just besides me.
Yeah, thanks, Justin. Thanks for inviting me.